Good morning and welcome to the Monday market update with me, David Madden. Today's date is Monday the 25th of November 2019 and the time has just gone 11:20 GMT. And it's been a fairly positive start to the European trading session today. Once again, the US-China trade story remains in the news, and we've heard some positive news on both sides. From the US side, Robert O'Brien, who is a US National Security Advisor, claims that it's still possible for a trade deal to be, for the phase one of the trade deal to be wrapped up between now and the end of 2019. And on the Chinese side, the Beijing government have announced their intention to introduce tighter rules and regulations and restrictions in relation to intellectual property rights. And this is something that's been of major importance to the US. Because every now and again, China talks about buying more soybeans and more pork from the US, but ultimately this trade war was never really about just China buying more and more agricultural goods off of the US. Intellectual property rights is one of the major areas of concern for the US. So if genuine progress can be made on this front, this is the sort of thing which can kind of push things along in terms of actual progress. It's likely that we're going to be talking about the US-China trade story probably non-stop between now and the middle of December, when the US are still scheduled to have another round of tariffs being imposed on Chinese goods. But we keep hearing regularly that both sides are keen to make a deal, provided the deal is right. So it's likely to continue around. But I think the IP, the intellectual property story, if it makes genuine progress, this is the sort of thing which can actually bring the deal forward. So it's been a fairly quiet morning. Other than that, what I'll now do is take a quick look at the week ahead, look at the major announcements on a corporate and economic front, and then after that, I'll take a look at some of the major markets. So starting off with the week ahead, and the week ahead article can be found on our website. If you go to cmcmarkets.com, under Insights and News Analysis, you'll find the bulk of the articles that myself and my fellow analysts write that are posted to the site. So looking ahead to tomorrow, we have full year figures from Topps Tiles. Over in the US, we have third quarter figures from Dick's Sporting Goods. On Wednesday, we have full year figures from Marston's, the pub crowd here in the UK. One of the more important pieces of information this week is the US third quarter GDP, durable goods, and core PCE numbers. They're out at lunchtime on Wednesday. Keep in mind, the US has had some decent growth in the first quarter, 3.2%. It grew by 2% in the second quarter. We've had 3 interest rate cuts from the Federal Reserve. So the US, those, especially the latter 2 interest rate cuts, are highly unlikely to have actually trickled down to the economy. So in the grand scheme of things, for as far as big developed Western economies go, the US is still doing fairly well. So, and the last we've heard, the Federal Reserve are giving off the impression that they're not going to be cutting rates. They're going to be keeping policy unchanged for the time being. Speaking of major policies, on Friday we have Eurozone CPI figures. So this month, these will be the inflation figures for the month of November. We're already in November at the moment. This is the month the European Central Bank restarted their government bond purchasing program. And we've not too long ago, we've heard in the last few days, we've heard from Christine Lagarde, the new head of the ECB, and she started talking about a new European mixed policy. And it really kind of says a lot when the person who's in charge of monetary policy is calling for fiscal policy. Fiscal policy being government spending and government taxation. So it really kind of says a lot about when this, how much the person in charge of monetary policy can do if she's calling for a fiscal policy, fiscal expansion. Looking ahead towards the back end of the week, we also have third quarter growth figures from Canada, and on Saturday at the weekend, we're going to have the official figures from China in terms of manufacturing and non-manufacturing. So what I'll do now is take a look at some of the major markets, starting off with a few indices. As I mentioned, European equity markets have gotten off to a decent start. On account of the kind of positive sounds coming from both the US and China in relation to trade. So the kind of wider view for the last 6-7 weeks, then the FTSE 100 has broadly been pushing higher. Obviously, that the highs that we've seen today have failed to take out the highs so far of early November, but we are pushing in that direction. And if we do kind of manage to move on higher from here, we could be looking at retesting this area here, the highs of early November, just which would come into play in around 7,430 odd. And should we go beyond that, we could be looking at targeting this area here in around 7,470. Any moves to the downside could find some support from, say, this blue line here, the 50-day moving average, which comes to play at 72.84. We can see on a few occasions that metric acted as both support and resistance not too long ago, and if metric has been important in the past, it makes it more likely it'll be important in the future, although there are no guarantees. It's only really if you kind of take out this area here in around 7,200, could then we begin to get a bit worried and think, you know what, maybe we're going to continue in the kind of wider trend that's been in play since July. But if we hold above 7,200, we could we could easily see the market retesting 7,400 and beyond. I'll take a look at what's going on over in Germany, and now the German market is in a far better shape than the British market. Not too long ago, the German market hit a 22-month high. So it gives you an indication of how strong the German market is, the DAX. And we can see here the last 2 days, the German market has been edging higher. So if we do look to kind of push on higher from here, we could be looking at retesting last week's high of in around 13,374, thereabouts. And if we go beyond that, we could then be looking at the next area of a big area of potential resistance could come into play in around here, a level last seen in late 2018. And that is in around 13,600. If we do, on the other hand, manage to turn over ourselves, and if we do take out the low of late last week in around just north of 13,000, we could be looking heading back down towards 13,000, or this area here in around 12,980. And if we go below that, we could be looking head down toward this zone here in around 12,800. As we can see, that area acts as both support and resistance on a few occasions and support on one. So we've that metric has been that region has been important in the past. So keep an eye out for it in the future should the market have a fairly sizable sell-off. The US markets are in a far better shape than their European counterparts. So start off with the Dow Jones. It wasn't that long ago that the US markets were at all-time highs, and we're calling the Dow Jones open around 27,952 thereabouts, which isn't a mile away. It wasn't too far away from the all-time highs that were achieved back in mid of last week. So if we do press on higher from here, we could be looking at targeting 28,000, big psychological number. And if we go beyond that, we could be looking at targeting the recent all-time highs, 28,160 odd. And then if you go beyond that, it would be uncharted territory. So traders keep looking towards numbers like 28,200, 300, 400, so on and so forth. But buying on the dip has proven to be a fairly popular strategy in recent weeks and months. So if we do see any move to the downside, we could see fresh buyers potentially enter the fold. So if the market does manage to turn over on itself and push a bit lower, support could be found from this zone here in around 27,500 or down to between 27,500 and 27,400, and even if you break below that, the wider bullish trend would still be intact. So we could find some support from this blue line here, the 50 moving average, which comes to play at 27,132, and we can see on a few occasions the metric has acted as support in the past, so it could be relevant in the future. I'll take a look now at what's going on the S&P 500. And to be honest, it's a fairly similar looking situation whereby it wasn't that long ago the market was at an all-time high, and we're calling the market higher today. So we're not too far away from in the near term we could potentially be posting record highs. So we're currently expecting the S&P 500 to open at 3,119 thereabouts, and the recent high has been in around 3,133. So it's plausible in the next session or two we could be looking at fresh all-time highs for the S&P 500. So the sentiment is clearly bullish. So if you take out the recent record highs, we could be looking at targeting 3,140, 50, so on and so forth. And if you do manage to kind of move a bit lower from here, support can be found from this zone here in around 3,065, or even below that, potentially at 3,025. And even if you go below that, it could head back towards the 50-day moving average, and that comes to play at 3,021. Take a look now at a couple of big currency pairs, starting off with the euro versus the US dollar. So the very wide theme has been throughout 2019 very much to the downside. And now granted, we did see a decent bounce back in the euro versus the US dollar in the middle of October, but then partially driven by the fact that there was chatter of another interest rate cut in October, which was delivered by the Federal Reserve. And now what we're seeing is the market appears to be turning over on itself again. We're back below the 50-day moving average, and we're not too far away from the kind of psychologically important 110 mark. So if you do manage to have a fairly sizable break below 110, below the mid-November low, we then could be looking at heading back down towards 109, or back towards this area here in at 1.0879. If on the flip side, we manage to push on higher from here, resistance can be found from this yellow line here, the 100-day moving average, and we can see in a few occasions that acted as resistance recently, so it could be significant, and that comes into play in at 1.1084. And even if you go beyond that, we'd really need to be taking out this area here in at 1.1179, or up towards kind of 112. We really need to be taking out these areas before we can then begin to think, you know what, maybe the wider downward trend has come to an end, and then we could be looking at targeting this area here in around 1.1249. I took a look now at the pound versus the US dollar. So opinion polls continue to put, have recently shown that the Conservative Party are in the lead. They're pro-business, so that's helped the British pound hang on to the gains that have been achieved in the last few months. And to be honest, we've seen the pound kind of largely trade kind of range bound in the last few weeks, just because the opinion polls are putting Boris Johnson's Conservative Party in front, pro-business, so it's good for the British pound. But on the flip side, there's still a lot of uncertainty going on. So some traders are a bit kind of anxious to take a very aggressive bullish position on the British pound, because opinion polls, if 2016 has taught us anything, is that things can go very, very wrong in terms of the opinion expectations versus reality. So that's why we're not seeing any kind of major kind of moves to the upside in the British pound, but the wider upward trend is still very much in play. If we do get a push on higher from here, we could be looking at taking out the recent high 1.3012. If we go beyond that, we could be heading toward this zone here in at 1.3178. Any move to the downside might find support from the kind of 128 or just south of it at 1.2768 region. And it's only really if you can have a sizable break below the 200 moving average, this red line here, in a one spot just north of 127, then we begin to think, you know what, maybe the pound is heading lower. Take a look now at what's going on some commodities, starting off with the gold market. So gold has been in a fairly decent upward trend. The wider view has been very much to the upside on the gold market. So what I'm going to do now is in relation to gold, the wider trend has been very much to the upside. It achieved a 6-year high in September, but as we can see, the market has been pushing lower since then. And what we can see here is it wasn't that long ago, only in the last week, the gold market fell to a 3-month low. So after a 6-year high, you probably expect some bit of a natural pullback, and that's what we've been seeing the last few weeks and months. Although the moves in gold have been fairly small, volatility is fairly low, but we can't ignore the fact that it has been drifting lower. So if we do manage to take off the recent lows in around 1445, we could make a target in this area here in around 1430. If on the flip side, we do manage to kind of press on higher from here, potential areas of resistance could be kind of coincide in around here between the kind of the 100 moving average and the 50 moving average, and that comes into play in a kind of band in around 1482, 1489 thereabouts. And it's only really if you can break north of this area here in at 1517, take off those highs, the highs of late October and early November. It's only if you take off those highs, because then we begin to think, you know what, maybe the recent downward trend has come to an end and the wider upward trend is going to be back in play. Take a look now what's going on Brent oil. So the oil market is often kind of like what equities often gets kind of subject to the US-China trade story. China's a major importer of oil. If things are looking good on the trade front, it makes it more likely that China is going to increase, is going to keep up their appetite for oil. So we can see here on the oil market since early October, it's been broadly been grinding higher. Hasn't seen any kind of major move to the upside. We're still below this red line here, the 30 moving average. So sentiment is moving positive, but it's not really bullish. But if you press on higher from here, we could be looking at targeting the 30 moving average at 64.81, and a move beyond that could take this area into play in at 65.79. And if you do manage to kind of turn over on ourselves, it's only really if you're going to take out, say, $60 or 59.60, because then we begin to think, you know what, maybe the kind of wider trend, the wider bearish trend is falling back into play, and then we could see further losses from there. And lastly, I take a look at WTI, and it's a fairly similar looking chart to what we saw in Brent, whereby since early October the market's been nudging higher. Brent WTI, to be fair, is in a better state. It has been, if you draw a line between the lows of early October and mid-October, we get this trend line along here, and the market's comfortably above that. In fact, WTI is actually back above its 200 moving average, so you can see that it's a bit more bullish than the Brent market. It's kind of making some gains to the upside, and if you do press on higher from here, we could look at targeting this zone here in around 59.32, and a move beyond that could bring $60 per barrel into play. If the market does manage to kind of turn over on itself, we could find support from this trend line here, which should come into play in around kind of 54.65 thereabouts. And if you have a fairly sizable break below that, we could be looking then back heading down towards the kind of 51 region, the lows that we saw in early October. Well, thank you for listening. That's all for me this week, and please tune in next week. Thank you very much.